Hello everyone. This is another problem on contract costing. Okay. Messrs. Arun Naik and Company undertook a contract on 1st January 2017. The contract price was rupees 10 lakhs. From the following particulars, prepare contract account for the year ending 31st December 2017. Now here is some information given. Machine installed, materials issued, labor, direct expenses, overhead charges, material returned to stores, cash received, retention money, cost of work not certified, then materials on hand, wages accrued, then value of machinery on hand at the end. General plant costing rupees 1 lakh was used for 3 months. Depreciation at 20% per annum is to be provided. Material costing rupees 2000 were sold for rupees 3000. In addition, scraps were sold for rupees 1000. Materials costing rupees 8000 were lost and rupees 5000 had been recovered from insurance company. So this is what is the problem. They have asked us to prepare contract account. Okay. So next line, write down Messrs. Arun Nayak and Company. Messrs. Arun Nayak and Company. The next line, contract account for the year ending 31st December 2017. The account you need to prepare particulars and two amount columns. Again particulars, two amount columns, debit as well as credit. Go through the problem. Now here they have given machine installed 50,000. Now machine installed. So this has to be taken on the debit side of the contract account. So to machine installed, amount is 50,000. So directly take it to the outer column because there is no adjustment for this. Next is to materials issued, 1,60,000. Again this has to be taken on the debit side. To materials issued and the amount is 1,60,000. 1,60,000. Okay. Now again go through the problem. Next is labor. It is nothing but wages. Now here they have given wages accrued. Okay. So this has to be added. And that also we have to take it on the debit side. To labor and the amount is 1,30,000. Take it inner column. Add wages accrued, or you can write outstanding wages. Outstanding wages and the amount is 3,000 rupees. It is 1,33,000. Okay, now again go through the problem. Direct expenses, there is no adjustment for this. To direct expenses, amount to the outer column 6,000. Again go through the problem. Overhead charges 5,000. Again on the debit side. To overhead charges, there is no adjustment for this. So again 5,000. Okay. Now next is materials returned to stores. This we need to show it on the credit side. Cash received, retention money will be taken later. Work certified. Okay. Now we will, now here on the credit side, by, first we need to take work in progress, work in progress, work certified, work certified, and then work uncertified, work uncertified. Okay, now what information is given related to work certified? Now here, see, cash received is given, retention money is given, then cost of work not certified. So this 20,000 is work not certified. Okay, so work uncertified. So write it here, inner column. Now they have not given directly how much is work certified, but they have given information related to how much cash is received and how much is retained, that is retention money is given in the problem. So by this information we can find out how much is work certified. Okay, now leave some lines and take down first working note, calculation of work certified. Now formula to calculate work certified is cash received plus retention money. Okay, cash received plus retention money. Now cash received is already given in the problem, right? So cash received is 4,50,000, 4,50,000 plus retention money is also given in the problem, that is 50,000 rupees. Okay, yes. Now which will be equals to 5 lakh rupees, which will be equal to 5 lakh. Okay, so your work certified, so in bracket you can write, you can mention the working note, note 1. Okay, amount is 5 lakhs rupees. Okay, add it and take it to the outer column, so that is 5,20,000 rupees. It is 5,20,000 rupees. Now next we need to take is, they have given materials returned to stores by, materials returned to stores. Okay, so the amount is 2,000 rupees, 2,000 rupees. Now next comes is materials on hand, credit side, by materials on hand, materials on hand, amount is 4,000 rupees. Okay, now in, after this chart some information is given in the problem. Okay, so general plant costing rupees 1 lakh was used for 3 months. So that first we will record it on the debit side, that is value of plant. It is costing rupees 1 lakh rupees. It is costing 1 lakh. Okay. Now here value of machinery on hand, at the end also we will record it on the credit side first, by value of plant at the end, value of plant at the end, amount is 38,000 rupees, which is given in the chart last point. Okay, now here A general plant costing rupees 1 lakh was used for 3 months. Okay, so already, so this plant, whatever they have purchased, that is recorded on the debit side at cost price, and depreciation at 20% per annum is to be provided. So depreciation should be calculated, and then value of that plant at the end has to be shown on the credit side. Okay, so for that we will calculate depreciation. So the value of plant is 1 lakh rupees, and which is used only for 3 months. Okay, so 1 lakh rupees into 3 divided by 12. So why 3 divided by 12? Because this plant is used only for 3 months. So only for 3 months depreciation has to be calculated. So 3 months into depreciation is 20%. So which will be equal to 5,000. Okay. Now this should be shown on the credit side. So how you are going to show? So that is by plant, okay, in bracket. The value of plant is 1 lakh rupees. Value of plant is 1 lakh. Okay. Minus depreciation is 5,000. Depreciation is 5,000. So deduct this. So that will be 95,000, which will be 95,000. Okay, hope so everybody is understanding. Okay, now next is material costing rupees 2,000 were sold for rupees 3,000. Okay, so material costing. Now material costing rupees 2,000, which is sold for rupees 3,000. Now 3,000 first for whatever value they have sold, that we are going to record by materials sold. Now material is sold for 3,000 rupees. Okay. Now costing rupees 2,000. It means there is profit on sale of material. Agreed? Because the value of materials is 2,000, but which is sold for 3,000. It means there is profit of rupees 1,000. So profit on sale of materials will be shown on the debit side. To profit on sale of materials. Okay, in bracket you can show the calculation, that is 3,000 minus 2,000. Okay, so the amount is 1,000. So there is profit of 1,000 rupees. Okay, now again go through the problem. In addition, scraps were sold for rupees 1,000. So scrap sold 1,000. So again we are going to show it on the credit side by scrap sold. They have sold it for what price? 1,000 rupees. Okay. Now next, materials costing rupees 8,000 were lost. Okay, and rupees 5,000 had been recovered from insurance company. Okay, now materials costing rupees 8,000 were lost. It is nothing but it is abnormal loss. It is abnormal loss. So abnormal loss we need to show it on the credit side of the contract account. But whatever 5,000 rupees is recovered from the insurance company, this we will not show it on not show in the contract account, but this we need to record it in the profit and loss account. Okay, so whatever abnormal loss is there, that only we are going to record, but whatever amount is recovered from the insurance company is not recorded in the contract account. Okay, so this we are going to show it on the credit side by abnormal loss abnormal loss, in bracket you can write as materials lost. Okay, yes, materials lost worth rupees 8,000. So whatever money is recovered from the insurance company, we are not showing it in the contract account, but that has to be shown in the profit and loss account. Okay, now go through the problem again. If anything is left out, we need to record it. Okay, like we have taken everything. Yes. Now close the account, find out whether there is profit or loss. Okay. Now credit side total is more. Total is 6,71,000. 6,71,000. Same thing. Okay. Now find out notional profit 2,16,000. 2,16,000. This is 2 notional profit carried down. Okay. Now this notional profit should be brought down by notional profit brought down. Okay, amount is 2,16,000. 2,16,000. Okay, now how much amount to be transferred to profit and loss account, that calculation has to be made. Now for that, next working note, calculation of amount transferred to profit and loss account. Now before calculating that, first we would like to know like how much percentage of work is completed. Okay, so which will be equals to work certified divided by contract price into 100, which is equals to, now work certified is 5 lakh rupees divided by 10 lakhs into 100, which is equals to 50%. It means 50% of the work is completed. Half of the contract is completed. So you can just write one sentence over here. Amount transferred to profit and loss account is equals to, now when half of the contract is completed, amount transferred to profit and loss account is 2/3 of the notional profit into cash received divided by work certified. Okay, so next line, which is equals to 2/3 into notional profit is 2,16,000 into cash received is 4,50,000, which is given in the problem. 4,50,000, sorry, 4,50,000, then divided by work certified as 5 lakhs rupees, which is equals to 1,29,600. 1,29,600. Okay, so this much amount will be transferred to profit and loss account. So here to profit and loss account, note 3, that is 1,29,600. Okay, now again make a total, that is 2,16,000, 2,16,000. Check how much is the balance remaining. Balance is 86,400. 86,400. Okay, so this will be transferred to reserves. In bracket you can write as balancing figure. Okay, so this is what is the problem. Hope so this problem is clear to everyone. Go through the problem, solve it again. Okay, so in next class again one more problem we are going to solve on contract costing. See you in next class.